Have you ever invested in the stock market and lost money? Or maybe you are too scared to start because you think it is risky. Imagine if you had the right strategies to grow your money safely and consistently. What if I told you that the secret to success in the stock market is not luck but a proven strategy? Hi, I'm Sanjeev Kumar, and in today's video, I'm going to reveal 5 powerful stock market strategies that can help you maximize your profit and minimize risk. Stay with me till the end because each strategy is a game changer for your financial success. Let's get started. First strategy is long-term investment strategy. Under this strategy, there are 4 points. First is buy and hold. Investing in strong stocks and holding them for a long term. This is called buy and hold. And the second point is value investing. Buying stocks that are undervalued based on financial metrics. This is called value investing. And third point is growth investing, investing in that companies which have potential to grow. That is called growth investing. And fourth is dividend investing. Some investors focus on dividend, so they invest in that company who give more dividend. This was the first strategy, long-term investment strategy. Second one is short-term trading strategy. Here are 3 points. First is day trading, that is also called intraday trading. We must avoid intraday. Ultimately, we lose our money in intraday. Second is swing trading. If you are holding your share for 1 week or 10 days, 15 days, that is called swing trading. And third one is momentum trading. Investing in stocks showing strong trends. That is called momentum trading. Now jumping to third. Third strategy is technical analysis based strategies. And first point is trend following. Buying when the stock is in uptrend and selling when it is in a downtrend. That is called trend following. Second is breakout trading. Entering trades when the stock breaks above resistance or below support. This is breakout trading. And third one is mean reversion. Buying when the stock is oversold and selling when it reverses to the average. Now moving to another strategy, fourth strategy, and the fourth strategy is fundamental analysis based strategy. This is very important and we follow this strategy, fundamental as well as technical. So here are 3 points. Earning growth strategy, it is very important, investing in companies with consistent earning growth. And the second point is sector rotation, moving investment between sector based on economic cycle. And third is contrarian investing, buying stocks that are undervalued or out of favor. Now moving to fifth point. Fifth strategy is risk management strategies. And this is stop loss strategy. Setting preferred predefined exit point to limit loss. So exit point is very important. If you are buying the share of any company, you must decide when you are going to sell, how much you are going to book the loss. So lower point must be clear. Second point is hedging with option. Actually, we do not follow option future, so we should avoid this. And third is diversification, spreading investment across different sectors and asset class to minimize risk. Diversification is very important. We always speak about diversification. So these are the five main strategies, and we should follow at least one strategy. We should not mix. And one strategy most of the people follow, buy on dip strategy. For buy on dip strategy, 5 points are very important. If you are buying the share before understanding these 5 points, then you will be stuck somewhere. Identify fundamentally strong stocks. If you are buying on dip, but the company is not fundamentally strong, then what will happen? You can understand. Second is wait for a temporary decline for correction. Third point, use technical indicator to confirm a reversal. Fourth is buy in phases to average the price. Fifth is hold and wait for recovery. This was the buy on dip strategy. Choosing the right strategy. At first, we understand why we should follow a strategy. Actually, we follow the news, but after after this video, we you should replace the word news with strategy, because every time we see that due to some news market is going down, due to some news market is going up. Okay, at present you can see that market is falling since October last year, and yesterday I think it it was falling due to some Trump announcement that he's going to raise the tariff rate. So always some news will come from somewhere. Sometimes we see that due to some war kind of situation in some country, and we see the effect in the stock market. So, but one thing, when you go outside, just go to the market, you see everything is normal. What Trump is saying, it does not affect directly to the market. People are buying the stuffs. It means company is making profit. Companies are making profit. So current news always affect the market, but it will not affect, it will not give the long term effect. So we must have some strategy. Otherwise, we follow the news, then we always feel uh, fearful. So choose the right strategy. For this, we need to understand, at first we must have investment goal. Long term, you want what your investment goal is, long term wealth building or short term profit. So you need to decide. Second is risk tolerance. You are a high risk trader or low risk investor. Third is time commitment. Time commitment is also important. Active trading or passive investing. And the fourth point is market knowledge. You are experienced or beginner. So these are the 4 points for choosing the right strategy. Now this is the time for call to action. If you found this video useful, please like this video, subscribe for more investing and financial tips, comment below for your thoughts or questions, and share the video with anyone who would benefit from it. Thank you so much for watching my video.